a kind of fruitfulness that you had been showing to the classes overall. Now, to give you a brief what understanding of what the subject is like, just for the newcomers, okay? There are like 11 units. I hope you have started your preparation and you are just on the verge of attending the exam. It has been postponed for quite a lot period of times as of now. So you'll be at the verge of attending the exam or to just overcome the exam as soon as possible. You have got 11 units in economic analysis, of which a part of it you can expect in the form of numerical questions. So numerical questions are generally from, you have the budget session, budget area. Then you have one from the national income estimates, one from money income analysis, and one you can expect from the demand and supply analysis in the form of elasticity. So these are the common areas where you can find numerical questions. And at the same time, case studies can also be expected. Case studies you can expect from demand and supply analysis chapter. Secondly, you can expect from the business cycle area. Then inflation also you can go through, or you can predict to have case study areas. Apart from that, there are so many areas in ABM, economic analysis especially, which is very easily scoreable. Certain questions are direct. You can just give a shot and you can cover, or you can really go for the complete entire marks for that question. For example, names of certain economists, which theories they are related to, or they will give you some factors that are responsible for demand and supply analysis, and they will ask you to find out which of the following is an odd one, which of the following is not included, which of the following can be included in the above series. So certain questions are direct questions. So my request is, kindly go through the entire material at least once before the exam. Make sure that you are understanding the entire concept. I know it is like economics, you might have felt like you have learned in your lower class, it is of no importance to you now, but economics plays a very important role in our day-to-day life. That is, even if you take newspapers, even if you go to your banking terminologies, etc., you can relate everything with economics. So we cannot keep it aloof. Economics has got its own importance. Even from your exam point of view also, it plays a very important role, because you can score your aggregate if you are quite sure and quite confident regarding the subject. So I don't know how far I can cover my PPT. So I have prepared like around 25 to 30 questions. Even if it is going beyond the 30 questions, I have a set with me ready, but not in the PPT form. I have it in my book. And if we are having extra time, we'll cover even beyond 30 questions. Okay. Hope my presentation is visible. If you have any problems facing while going through the presentation also, please let me know. Fine. So one more thing which I want to convey is, I'll show a slide which includes one question and 4 options. I'll wait, or I'll give you like around 2 to 3 minutes to find out the right answer. Please put your answers in the chat box. I'll give you time for discussion also. So hope you will cooperate with that. Don't shout out the answer, so that it will not create disturbances to other participants also. Make sure that you are participating. Whether it is right or wrong, it does not matter. Just give your try. Just analyze or evaluate yourself how far you know about economic analysis. Okay. Put your answers in the chat box, and after 2 minutes, I'll just over to the next. I'll move on to the next slide, so that I'll provide the right answers. Okay. So first question, I hope everybody is ready. There are some numerical questions also. So kindly keep your papers and pen and stationery items along with you. Okay, first question is regarding the Monetary Policy Committee. I've randomly chosen few questions from here and there. Just find out what is the correct target that was applied by Monetary Policy Committee, and which is the upper tolerance level and which is the lower tolerance level. question is regarding Monetary Policy Committee. They have asked you what is the targeted range of the inflation which is tolerable for our country. Make sure that everybody is it. Right, many of you have given the right answer. Okay. Okay, answer is B. See, this Monetary Policy Committee was set up in the year 2016. Okay, the intention behind the committee was to find out the tolerable level of inflation for our country, and that tolerable level of inflation is 4%. It can go to an extent of 2%. That means minimum of 2% and maximum of 6%. And the most tolerable rate is targeted rate is 4%. So answer here is B. Targeted rate is 4%. The upper tolerance level is 6%. India does not have the capacity of tolerating rate of inflation beyond 6%. Neither it should go less than 2%, because a small rate of inflation is always good for the economy. That is the reason why we have kept a minimum level of tolerance level as 2% and a maximum of 6%. Clear? Any doubts regarding the first question? But many of you have committed mistakes also. C, D answers are given. Please make sure that you are understanding the concept. MPC actually consists of 6 members, 3 from Reserve Bank of India and 3 will be appointed by the Government of India. They have to study about the inflation, submit a report once in every 6 months, and if India is going beyond this targeted limit, that is between 2 and 6%, they have to find out what the reasons are like and rectify it as soon as possible. Okay, year in which Monetary Policy Committee was established is 2016. Fine with the first question. Moving on to the second one. Which of the following causes of inflation is more easy for the public authorities to control?
Archana, your presentation has not moved. It is still answer B. Now it is right.
Madam, please take the PPT to full screen, ma'am.
Okay. But the problem is when I do this, I won't be able to see your chat box. That is the reason why I have kept it minimized.
Because we can able to see the answers, there's the next slide.
Okay.
So,
Okay, sir. Okay, can I give you the answers?
Yeah, you can.
Yes, sir. I'm moving a bit faster, okay? Too much time I can't waste. Answer is A. More easy to control is demand pull, right? Demand pull inflation. If inflation is actually caused due to, if inflation is actually caused due to demand pull inflation. One, two, just a second. Okay. Demand pull inflation, then it is more easy to control. See, when aggregate demand is actually greater than, when it is greater than aggregate supply, this will lead to inflation due to demand pull inflation. If cost of production is higher, that is, if factors of production are demanding more remuneration, this causes cost push inflation. Cost push inflation is more difficult to control than demand pull inflation. Okay. How can you control demand pull inflation? You just have to increase the supply. If inflation is caused by demand pull, you can rectify the problem by increasing the supply. But if the inflation is caused by cost push or any factors of production are demanding higher remuneration, this will create a problem whereby monetary authorities or even any authorities cannot interfere and bring down the rate of inflation. So one that is more easy to control is demand pull. More difficult to control is definitely the cost push inflation. Right? Second question is okay. Sorry, sir, I can't go for the maximizing because I won't be able to find your answers. Okay, I hope this is visible. Third question.
Okay, you can read that.
Yes, sir. Third question is, which of the following combination is not correct for defining the subject of economics? This is from the first chapter. There are certain economists who had given you different definitions. The question is, which of the pair is wrongly matched? Yeah, so many right answers. Marshall gave the welfare definition. Robbins gave the scarcity definition. Definitely Adam Smith gave the wealth definition. That was the first definition. Pigou did not give growth definition. Can you give the name of the person who gave growth definition? Who gave the name, who put forward the growth definition of economics? Right, sir. Yes, growth definition was put forward by Paul A. Samuelson. Okay, growth definition was put forward by Paul A. Samuelson. So the answer is option D. That is not correctly matched. Okay, growth definition was put forward by Paul A. Samuelson. We don't have a specific definition that was put forward by Pigou. Growth definition was put forward by Paul A. Samuelson. Next question. Okay, the phase of business cycle where wages will be paid low, prices are the lowest, demand slowly starts to increase. This causes stock of goods to become insufficient compared to that of demand. It would be good if you can put the question number also with your answers. See, understand the situation. It is like everything will be very low. Wages will be low, prices will be low. Demand will slowly start to increase. So demand is much higher when compared to that of supply. This will encourage the producers to increase their production. What stage of business cycle are we discussing about? Yes, it is the recovery stage, right? D, answer is D, a recovery stage, because everything will be low. It is not like recession. It is a stage where you can find some positives in the economy. For example, you will find demand is slowly picking up the pace. This causes demand to be greater compared to that of supply, and this will create a kind of encouragement or a kind of optimistic nature will be generated from the supplier side, so that they can induce more production. They will undertake more production. Wages will be lesser because they have started to take up production and they want people to work for them at a lower wages. It does not matter, but this is a kind of a boost to the economy. So fourth question answer was recovery. Positive stage of the economy is recovery. Fifth question is a numerical question. When chicken prices rise at 40%, quantity of KFC fried chicken supplied rises by 20%. You are supposed to find out the elasticity of supply. Everybody is going for 0.5. No other answers other than 0.5. Right, answer is 0.5. See, to find out the elasticity of supply or demand, what you have to do is you have to find out change in the quantity supplied by change in the price. Since this has already been mentioned in percentage value, you have to just give the ratio of change in quantity supplied at the rate of 20% divided by 40%, which is equal to 0.5. Should I elaborate? Is that question clear?
Yes, ma'am.
Right. Next question. If you have any confusions, please feel free to ask, okay? Okay. Next question is again a numerical question. You are supposed to find out the value of GNP at market price from the following information. Options are given at the right end: 3390, 3930, 3090, 5250. I'll put it in a Zoom manner. Please take your time. This is a numerical question. Can somebody give me what method should be applied to find out? We have 3 methods of estimating national income. From the question, can you identify the type of method? GNPMP, I suppose Amrita ma'am, you have given the answer for this question. No, it is not correct. Yeah, first method, product method or the value added method, right? Right, ma'am. Yeah. Option A. Yeah, correct, ma'am. Jayanti ma'am, your answer is right. GNPMP is 3390. Can you give me the value for GDPMP? Of course, you have to find GDPMP and then move on to GNPMP. What is GDPMP? No. Question is GNP at market price. What is GDP at market price? What answer did you get as GDP at market price?
This is a sure question.
Yes. Repeated questions, you can easily score like 2 or 3 marks from this numerical question from national income estimates. Okay, shall I work that out? I suppose everybody is stuck with that question. 3450. Yeah, correct, ma'am. Okay, how to work this out? See, when you take the values of all the sectors, that is primary sector, secondary sector, tertiary sector, and deduct the intermediate consumption, you will find out the answer as GDPMP, right? GDPMP means you have to add 1500 plus 2700 plus 2100 minus the 750, 1200 and 900. This is equal to 3450, which is gross domestic product at market price. In order to convert gross domestic product at market price to GNP, you have to add NFIA. Okay, plus NFIA will give you GNP at market price. This is equal to 34, right? 3450. You have to add, but unfortunately our NFIA is minus 60. So answer is equal to 3390. Gross national product at market price is equal to 3390. Fine?
Madam, can you please go back to the question slide?
You want to see the, oh, okay, sir, okay.
Yes. Thank you, ma'am.
Right, sir. Any confusion? Should I repeat something?
Ma'am, that first option is the confusion thing, right? That government transfer
Thank you,
payment
ma'am.
is
You are
not
not
at all.
audible, ma'am.
The first thing, no government transfer payment. That is actually not at all. We are
Yeah.
using that
No, no, no. They
value,
are
right?
just they have just given it for confusing you.
They have just given.
Yeah. It is of no
Yeah,
value for you. Only what is required here is a value added in the three sectors, NFIA and the
And the
intermediate
intermediate
consumption. They may give
consumption.
you many more variables similar to that of this kind.
Okay.
For example, they may give you depreciation, they may give you transfer payments, they may give you taxes. All these are not required. Okay. I hope everybody.
Ma'am, can you please explain once again, ma'am?
Okay, ma'am. See, you have got. Can I take the board? Right. Just a second. See, when you have to calculate the value of GDPMP using what is known as the income first method, which is value added method, what you have to do is you have to add the total production in primary sector, add with the secondary sector and the tertiary sector. Okay, this is on one half. Second half, you will have all intermediate consumption. Intermediate consumption of primary sector, intermediate consumption of secondary sector, and intermediate consumption of tertiary sector. Fine. That answer was equal to 3450. Fine. From GDP to GNP. Domestic is smaller. I had already mentioned in the classes. Domestic is a smaller concept. National is a bigger concept, right? So in order to convert a smaller to a larger concept, you have to add. And what should be added? You should add NFI, net factor income from abroad. We had already calculated GDP MP as 3450, but our NFI is a negative value, this minus 60. Right? So this causes GNP as 33. This is your final answer. They have asked you to find out GNP at market price. You shouldn't stop with 3450. They may give you the option as 3450 itself, but that is not the answer. You are supposed to find out GNP at market price. Clear?
Yes, ma'am. Thank you.
We'll go back to the okay, next question. You are supposed to find out the value of M1.
This is another important sure question, no doubt about that. Calculations come from this.
Yes, you should learn the equations or the relationship between different variables that are used for calculating the money supply estimates, okay? From M1, M2 and M1, M2, M3 and M4. Yeah. Yes, NFIA stands for net factor income from abroad. Sanjay sir, is the concept clear?
Yes, ma'am.
Okay. The question answer, most of you have given the right answer. What is the equation for finding out M1? Can somebody post the equation for finding out M1 value? M1 is equal to currency with the public plus demand deposits with the commercial banks plus other deposits with the RBI, right? Your answer is B. You can apply the question directly. Here they have given you the currency value, demand deposit value and other deposit value. So answer is 5,30,000. 5,30,000 is the answer. Right? Right. Next question. Which of the money supply aggregate is said to be the least liquid? Please pay your full attention on the question, which is said to be the least liquid. Right. M4 is said to be the least liquid, M1 being the most liquid. M1 is said to be the narrow money, which is the broad money. Broad money is M3, right? I hope that is clear. M1 is the most liquid form of money that is being circulated in the economy, and the least liquid is said to be the M4. It is moving from M1 till M4. M1 being the least liquid and M1 being the most liquid and M4 being the least liquid. Okay, this was a direct question. Next question. Which of the following cannot be included in expansionary fiscal policy? Mixed answers. Question is, which of the following cannot be included in expansionary fiscal policy? See, we have got two policies. One is monetary and the second one is fiscal policy. Fiscal policy is adopted and implemented by the government. Monetary policy is adopted and implemented by the Reserve Bank or the central government, central money authorities. When they are planning for expansionary policy, they will try to see that more money is being injected into the economy. I hope I'm clear. When the government or the monetary authorities are planning to expand the policy, more money will be injected in the economy. Out of these four options, which one do you find like it is not being injected into the economy, rather it is being pulled away from the economy? Option B, right? Right? Option B. Expansionary fiscal policy, you cannot expect penalty rates to be increased. When penalty rates, tax rates, etc. are increased, what happens is money is being pulled from the economy back to the government. That causes contractionary fiscal policy. Okay, it leads to contractionary fiscal policy. So other than B, all other options lead to expansionary fiscal policy. Is it okay? Did you get the question and the options? Why did so many give answer as a C? C was dealing with establishment of new schools. When government is establishing new schools, more people will be getting job. More people getting job means they are paying to the economy, or they making payment to the economy. That means expansionary fiscal policy. Option C is not the answer. Option B is the answer. Clear? Fine. Should I repeat something? Should I clear or clarify any doubts so far?
Clarified transfer.
I did not get you, ma'am. You are not audible. Can you put in a chat box? Option D, increasing transfer payment. Transfer payment means all the kind of government help which reaches from the government to the public. For example, pensions, subsidies, scholarship. Transfer payment means all the one-sided help or financial assistance which reaches from the government to the public, for which the government is not expecting any direct returns. Examples are pensions, subsidies, scholarships, allowances, etc. Right? When the government is increasing the transfer payment means it is actually applying expansionary fiscal policy. Now clear? So D is also being included in that expansionary fiscal policy method, but increasing the penalty rates actually leads to contractionary fiscal policy. Okay? Right. Next question. Okay, 10th question. Elasticity of supply is said to be dash when quantity supplied of a good remains unchanged as a result of changes in the price. What about others? I can find only a very few names which are repeatedly seen in the comment box. What about others? Like we are having like 65 plus candidates here, but only 10 to 12 names are commonly seen. Are you all working out, trying to work out what is happening? Yes, option is answer B. No, answer is option B, perfectly inelastic. Okay, let me use the board, just a second. Okay, see, perfectly inelastic is a type of elasticity, whether it be demand or supply, it does not matter. Both are having the same concept. You have quantity demanded or supplied on x-axis and price on y-axis. Whatever be the change, and if your supply or demand remains constant, this means you will have a vertical straight line demand or supply curve. When demand or supply is unchanged, you have the common relationship or elasticity which is found out with the equation change in the price of the commodity, change in the quantity demanded or supplied of the commodity with respect to change in the price into initial price divided by initial quantity demanded or supplied. Here, when you are calculating elasticity as per this situation, numerator remains 0, and whatever be the change in price, it does not matter. If numerator is 0, that is there is no change in quantity demanded or supplied. Numerator being 0, your elasticity will also be equal to 0. This is a situation of perfectly inelastic supply or demand. You will have a vertical straight line and elasticity will be equal to 0. Fine? Is that okay? Fine. Answer is option B, where elasticity is perfectly inelastic supply curve. That means there will be no change in the quantity supplied irrespective of changes in the price. Okay, many of you have given the right answer. Next question. Again, based upon elasticity, find out the elasticity. I have already given you the equation to find out the elasticity. Find out the value of elasticity using these information. Apply the equation which I had written on the board earlier. Elasticity is equal to delta Q by delta P into P by Q. Apply that equation and find out the answer. Yeah, correct answer is B. See, change in quantity supplied is 500 units. Change in price is 100 units. Initial price was 2000 rupees and initial quantity supplied for that 2000 rupees was 2500 units. So answer is equal to 4. Elasticity of supply is equal to 4. Clear? Should I repeat? Okay. Can you move on to the next one? Okay, dash refers to a market situation where quantity demanded is equal to quantity supplied. And please feel free to ask your queries, okay? Even if I'm moving on to the next question, if you have any doubts regarding the previous ones, please feel free to ask.
Ma'am, in one of the previous question, the equation for elasticity of supply was given as change in quantity supplied by change in price only.
Yeah, but ma'am, that was percentage change in quantity supplied with respect to percentage change in price. Okay. 11th question was in terms of quantity and price in units. They have not mentioned the percentage change. That is the reason why we had given you two different equations. If percentage is given, you just apply change in quantity, percentage change in quantity supply divided by percentage change in price. If units are given, please apply this question, this equation.
Okay, thank you.
Right. Yeah, answer for 12th question. So please participate, put your full effort in giving the answers. 12, many of you have written A, many of you have written C. Answer is actually C. Okay, both equilibrium price is also known as market clearing price. Now, what is actually equilibrium? Equilibrium is a situation where demand is equal to supply. Fine, just a second. Equilibrium is a situation where demand is equal to supply. So when demand is equating with that of supply, market will actually clear. Fine. That is, you might be familiar with the schedule where price is given, quantity demanded and quantity supplied is given. When price increases, demand tends to work opposite to changes in price. So when price is smaller, demand will be higher. It falls as and when price increases, right? But supply is positively related to changes in price. When price is smaller, supply is also smaller. As and when price increases, the supplier will be encouraged to supply more. This is a point where demand is equating with that of supply. Means at rupees 3, demanded quantity will be equal to the quantity the seller is ready to supply. It is here where market is entering into a situation where demand and supplier, consumers and sellers are happy to enter into a business activity. We know it is an equilibrium price, but at the same time, we will also consider it as market clearing price. Why? Because at this point of time or at this price, sellers and buyers would be happy to engage in all business activity. Fine. So option is C there, not A alone, not B alone. Option is C, both A as well as B. Okay. Option is C. Next question. Okay, this is the one which is coming from, I suppose it is from the 7th chapter. 6th, 7th and 11th unit is basically from Indian economy. One which is related to our historical Indian economy in the initial period of independence. What is the rate of growth, which is specifically known as Hindu rate of growth? What rate of growth is specifically known as Hindu rate of growth? Please don't Google and find out. This is what is actually happening with the students of our college and youngsters. Even if we go for asking questions, they'll take like around 10 to 15 seconds and give out the answer. If I ask further questions on the same topic, they will find it difficult to provide more answers and explanation. The reason is they would be searching through the Google and finding out the answer for the first question, and all supplementary answers and question does not matter. Yeah, option here is, correct answer here is 3.5. 3.5%. Why 3.5%? Because this period, that is from 1950 till 1980, that is the initial period of our independence, actually saw a stagnant growth rate. For the 3 decades, the average growth rate was said to be of 3.5%, which is generally known as Hindu rate of growth. Why? Because this kind of growth rate was seen in Hindu undivided families of that period of time. And this Hindu rate of growth, that terminology was actually given by an economist from Kerala, Dr. K.N. Raj. He was a person who named it as Hindu rate of growth. So the time period is from 1950 to 1980, and the rate of growth that was seen on an average, okay, not particular to 3.5, on an average, it was 3.5% per annum. Fine. Next question. The type of good which has got a negative income effect. See, we have got 3 categories of goods. One is a normal good, one is a superior good, and one is a inferior good. Out of these 3 categories, which is having the speciality of negative income effect? Yeah. Many of you gave the right answer. Option is D. Now, what is inferior good? Inferior good is nothing but the type of good which we tend to consume less as income increases, right? This causes to have negative income effect. Negative income effect is a situation where when income increases, instead of increasing your consumption, when we are declining or reducing the level of consumption, then income effect would go negative. So only those commodities which we tend to consume lesser as and when our income increases is inferior good. Inferior good does not increase, its consumption does not increase with the increase in income. Okay, but it is positive for other 2 category, normal commodity as well as superior or luxury good, both are same. Normal and superior or luxury commodity has got a positive income effect. That means as and when your income increases, you tend to purchase more or consume more of normal and superior good, but inferior good, you go in the reverse direction or opposite direction. Okay, 14th question. Right, 15th one. Okay, this is the details. I'll give you the question. Please make note of the details. Given compensation of employees, capital consumption allowance, rent, interest, and profit, subsidies are given, NDP at FC is given, NFIA is given, indirect tax is given. Question is not put in the slide. Please make note of the values. I'll give you the question in the next slide. Okay, moving on to the next slide. Okay, supposed to find out GDP at market price. question? Okay, ma'am. These are the values and you are supposed to find out GDP at market price from these values. Yeah, GDP at market price. Correct, sir. Your answer is right. You're supposed to find out GDP at market price. Yeah, answer is 1515. Okay, that is compensation of employees plus all the income from property and entrepreneurship like rent, interest, profit, etc. plus mixed income of self-employees. This will be equal to net domestic product at factor cost. I suppose you remember that we are making use of the second method of estimating national income, which is the income method. As per income method, when you are adding up compensation of employees, COE, compensation of employees, income from property and entrepreneurship, and mixed income, it will help you to reach NDP at factor cost. If you want to convert NDP at factor cost to GDP, you have to add depreciation. Okay, depreciation is not given as it is there, it is given as 26, right? Capital consumption allowance, that is the synonym for depreciation. Now NDPFC, here you have got NDPFC as that has been given, right? 1450 is the NDPFC. Now, in order to get GDPFC, 1450 plus depreciation, 26, which is equal to 1476. Now, in order to convert GDP at factor cost to GDP at market price, you have to add net indirect tax. But here they have given you indirect tax and subsidies as separate, 57 and 18. So you have to add 1476 plus 57 and 18, difference is 39, which is equal to 1515. So GDP at market price, according to the given values is equal to 1515. Clear? Just one answer, nobody others attempted.
Can you please explain once again?
Yeah. Can I use a board instead of the value? I mean the.
Sure.
Yeah. See, we have different methods of estimating national income, right? As per income method, you have got the circular or flow chart like this. You have compensation of employees on one hand, like salaries, wages, incentives, etc. will come under this heading. On the second hand, you will have everything that is attained from property, okay, as well as entrepreneurship. Property and entrepreneurship, it can be in the form of interest, it can be in the form of profit, royalty, rent, etc. All these will come under the second heading, income from property and entrepreneurship. Third one is income received as mixed income. Okay, mixed income is the kind of income which you find it difficult to distinguish. If I'm earning income from my hobbies of catering business, or I'm having gardening, I'm earning income from there. Those are mixed income. Now, when you add these values, compensation of employee plus property income plus mixed income, this will help you reach net domestic product at factor cost. Fine. Your question is GDP at market price. So NDP FC should go back to GDP MP. So if you add depreciation to NDP at factor cost, they have not given you as depreciation as it is, but instead they have provided you with the synonym capital consumption allowance. It is very equal to that of depreciation. You have to add depreciation. Okay, this will help you reach GDP at factor cost. No one can hear your presentation. Have I muted? No, it is on.
Yeah, you're audible. Are you all listening to hear?
Yeah.
Hello.
Am I audible?
Yes, sir.
Is she audible to you?
Audible,
Yes,
sir.
sir. Yes.
Okay, fine.
Yeah, please.
Okay, GDP at factor cost. Now, to convert GDP to GDP at market price, factor cost and market price, the difference is net indirect tax. Factor cost is cost of commodities before moving out of the factory gate. Market price is value of a commodity when it reaches the market or in the hands of the consumer. Of course, we know market price will be bigger, right? Factor cost will be smaller. So in order to convert factor cost to market price, you have to add net indirect tax, FC plus net indirect tax, NIT. Net indirect tax is the difference between indirect tax and subsidies. They have given you indirect taxes 57, subsidies like 18. So difference between 57 and 18, which is 39, is the net indirect tax. This is your GDP at market price. This is how you compute the value. Right?
I think someone raised a hand. Anything to be asked?
Yes.
Who is that? S.
S has raised a hand.
Anything to be asked? Okay, you can continue then.
Right. Is that okay, ma'am?
Yes,
Okay.
ma'am.
You should be familiar with the equations. You should be familiar with the methods. Then only it will be easy for you to compute questions if it is from national income estimates. Okay. Otherwise, it will be quite difficult for you to understand what is being asked. Okay. Moving on to the next question, which is based upon the same thing, same given values, you are supposed to find out mixed income of self-employees. Same values. It is divided into two questions. First question is to find out GDP at market price. Second question is you are supposed to find out the value of mixed income.
Can you place the figures again, the question again, so that
Okay, sir, right.
that will be better for them to. Yeah.
Values are given. From the same values, you are supposed to find out the mixed income of self-employees. I have given you the flow chart. From there, you can find out the value of mixed income. Yeah, correct, ma'am. Correct, sir. 187 is the answer. Can somebody give me the explanation? How did you get 187? Yeah, NDPFC. All right, NDPFC is 1450. And when you add compensation of employees with that of the property income, yeah, you will get the balance remaining is mixed income. Fine. Where is that question? Option is C, 187. Net domestic product at factor cost is given as 1450, right? Okay. This is nothing but this is equal to compensation of employees, which is 810, plus the income received from properties is 453, plus we don't know the value of mixed income. Now, how can you find out the value? 1450 minus, I suppose it is 1260, right? Yeah, 187 is the answer. Clear? Is it okay? Why so many of you are leaving? Can I move on to the next question?
Yeah, you can proceed, ma'am.
Yes.
That's good. You have to cover also. These
Yes.
are very important questions which are likely to come for the examination. Very important, no doubt about that. Yeah.
Okay, related to national income estimates again. Which of the following estimates are wrong? Find out the wrong answer. Again, mixed answers A, B, D, C. All the four answers are given. Options are given. Okay, let me ask you. What is the difference between domestic and national variables? What is the difference between domestic and national variables? NFIA, right? Domestic excludes NFIA and national includes NFIA. Fine? What is the difference between gross and net values? Gross and net values? Depreciation. Gross includes depreciation and net excludes depreciation. Difference between market price and factor cost. Net indirect tax. Fine. Market price includes NIT. Factor cost excludes NIT. Now you can identify here. First option, national income is always, it is always equal to NNPFC. So market price, from there you have to convert to factor cost. That means you have to deduct net indirect tax. Any value when expressed in terms of market price, if you want to convert that value to factor cost, you have to deduct NIT, net indirect tax. Second option, gross domestic product at market price is equal to gross domestic product at factor cost minus NFI. Is that correct? That is wrong, right? GDP at market price, to convert it into GDP at factor cost, what should have been the right answer there? Option is B. What should have been the right answer there? Instead of NFIA,
Plus NIT.
yeah, you have to add net indirect tax. Correct. You had to add net indirect tax. Other two options are correct. GDP at market price will be equal to GNP at market price minus NFI, because you have to identify the difference between domestic and national. Even the fourth option, it is correct. Factor cost is given, market price you have to convert, you have to deduct NIT from market price. So option B is the wrong answer. Okay, option B is the wrong answer. Right, next question. Calculate the rate of inflation of a company whose price index is given in current year as 120 lakh and price year in base year is given as 100 lakh.
Archana, can you, in that answer, can you
Yes.
give the, you're given the option, can you give the correct answer so that those who are not learned
Okay.
can.
Right, I'll give it. Okay. Eighteenth question. You can use the GDP deflator method here. You're supposed to find out the inflation rate or percentage where a company's current year price is given and base year price is given. Again, mixed answers. A, B, C. No one is going for D. See, option is, answer for that question is A. Why are you going for C? How to find out inflation of any country or any economy? Current year price minus base year price into 100 divided by base year price. Right? Current year price is 120. 120 minus base year price was 100 into 100 right? Divided by base year price. Base year price is 100. Answer is equal to 20. Fine. Inflation, you can never say it is like 0.2 percentage increment or 0.1 percentage increment. There will be a minimum value of 1% or 2%. So answer is 20. You can find that the price of a commodity for present year is 120 rupees. Previous year it was only 100 rupees. What increment in the price did you find out? Can you say only 0.2 percentage of increment? It was 20% increment, right? Last year it was only 100 rupees. This year it went up to 120 rupees. So 20% increment in price. Is that question okay? Fine. Right. Next one. Okay. Related to the present budget, what is the amount that has been allocated for PM Atmanirbhar Swasth Bharat Yojana through the budget of 2020-21? You have to be familiar with the budget, at least the basic figures. See, just a random guess. Yeah, option is A, 64,180 crore. Can you give me what amount has been set aside? Okay. What amount has been set aside for public sector banks? For revitalization of public sector banks? What amount has been set aside for revitalization or recapturing of public sector banks during the 2021 budget or through the budget? What amount has been set aside for the development of public sector banks? Even at least that you should find out. Right, sir. 20,000 crore has been set aside through the budget of 2020-21 for development of public sector banks. Okay. Next question. Yeah, what is the disinvestment target for the year 2020-22, which was announced in the budget of 2020-21? Yes, it is 1.75 lakh crore, option A. Disinvestment is a kind of raising revenue by the government through selling of their own public sector shares to the private individuals. It has been put into practice since the implementation of LPG, 1991 economic reforms. And for these many years, they have been successful in raising so much of amount that for the year 2020-22, they are targeting, government is actually targeting to raise 1.75 lakh crore for from disinvestment. Do you remember which part of union budget do we include disinvestment as? Is it included under capital receipt of the budget or revenue receipt of the budget? Where can we include disinvestment revenue? Capital receipt of the budget or revenue receipt of the budget? Yeah, capital receipt of the budget, because it is actually through disinvestment, it is actually we are cutting down the asset availability or worthiness of the assets of the entire economy. Due to this, we are bringing down or including the value of disinvestment in capital receipts of budget. Okay, next question. How can we calculate personal disposable income? What is personal disposable income? I'm very sorry, the answer is wrong. What is personal disposable income? You can make out from that term itself. Personal disposable income is what is left in your hand after making certain disposes or certain kind of taxes or payment to the government, which is meant for your usage. Okay, if you're earning like 1 lakh rupees a month, after making what deductions, what is left in your hand for your personal use? That is personal disposable income. So what should be deducted? Should it be direct taxes? Should it be indirect taxes? All direct taxes. See, here option is B. Answer is B. All personal taxes should be deducted from the total income an individual is receiving so that he can use for his consumption and saving. How come indirect tax is excluded? Because when you are consuming any commodity, indirect taxes already comes in that consumption. You are purchasing a good or purchasing a service means you have to pay GST. That is an indirect tax. Unless and until you consume, you are not going to pay the tax. Fine. So what personal disposable income stand for is deducting all personal taxes or all direct taxes, whatever is left in the hands of the public for their disposal, for consumption and saving is personal disposable income. Okay, next question, question number 22. Concept of liquidity trap can be experienced when interest rate tends to remain the same even though increment in money supply is eventually done by the authority. Okay, what is the shape of the demand curve during this situation? Yeah, answer is option B, perfectly inelastic situation. Okay. See, what is liquidity trap? Liquidity trap is a situation where you have the demand for money, which is a downward sloping curve. Rate of interest is given on y-axis. Level of income generated in the economy is given on x-axis. Perfectly elastic is a situation where demand for money curve becomes horizontal straight line. So as long as the money supply is increased by the monetary authorities, your rate of interest will go on falling. See, here rate of interest was higher, increase in money supply causes rate of interest to fall. Again, increment in money supply causes rate of interest to further fall. But after reaching a point, that is when demand for money starts to become perfectly elastic or horizontal straight line, any increment in money supply will have no effect on rate of interest. Rate of interest will remain the very same, however hard the monetary authorities actually try to increase the money supply. This situation is known as liquidity trap. This is a trap actually put forward by the economy so that there is no effect on rate of interest on all the decisions taken by the monetary authorities. Right? So option there was just
Archana, you are there? I think we missed Israel. Let me check up.
sorry.
We
There
miss
was
you.
net issue.
Yeah, good.
There was a net issue. Okay. So that is clear. Is that clear? That question?
Hello?
Liquidity trap question.
Let someone respond to this, please.
Many of you
No.
left. This shows your eagerness to learn something new. Okay.
Please, yeah. Good, you can proceed, ma'am.
Right, sir. So answer for that question is perfectly elastic situation where demand curve, money demand curve becomes, I've given as B, the answer is A here, right. Perfectly elastic means it becomes a horizontal straight line. Fine. Next question, okay, 23rd question. I'm not going to make you wait for a longer time. Which was the theory or who put forward the theory which is known as demand for and supply of interest theory? Direct question. If you know the theory and name of the propounders, you can easily score that mark. So don't waste these easily scoreable marks due to your less interest. A, B, anybody going for C and D? Yeah, C. Demand for and supply theory of interest was actually put forward by Alfred Marshall and Fisher. This is the classical theory. Classical theory of interest. Do you remember classical theory of interest? Downward sloping supply curve and upward sloping downward sloping demand curve and upward sloping supply curve of money, where demand for money is inversely related to rate of interest and supply of money is positively related to rate of interest. This causes intersection of demand and supply causes the market rate of interest to be determined and quantity of money that is being supplied and demanded in the economy being determined. Okay, option C, which is also known as classical theory of interest, is actually put forward by Marshall and Irving Fisher. Okay. Next Next question, 24th question, which of the following is not an economic activity? Which of the following is not an economic activity? Yes, answer is option B, which is not an economic activity, means investing in financial assets only causes transfer of ownership. It does not actually generate anything. You are investing in securities, you are investing in some bonds, debentures, means government is raising money from you. That means your that 10,000 rupees worth will be moving from my hand to somebody else's hand. It is not an economic activity. Production is an economic activity. Consumption of whatever produced is an economic activity. To make it available to all the different parts of the economy is an economic activity, which is known as distribution. So investment in financial asset is the wrong answer. Means not the correct option. So option B is the answer. Okay, next question. Steepness of the IS curve depends upon the elasticity or sensitiveness of investment demand with respect to what? Right, correct. IS curve as well as LM curve depends upon the changes in rate of interest. Okay, rate of interest is the factor that influences the steepness or the flatness of the IS curve or the LM curve, which you have learned in the theories of interest. Okay, option is C. Rate of interest is the correct answer. Next one is again a numerical question. Please take down the value. You are supposed to find out the value of real GDP for the year 2019-20 from the given information. Yes, nominal by real into 100. You will have, let me take that. Okay. GDP deflator is equal to nominal GDP divided by real GDP into 100, or I'll give it like this. Okay. Nominal GDP into 100 divided by real GDP. So in order to find out real GDP is equal to, you have to find the reverse, right? Take GDP deflator to the underneath. So you will have nominal GDP into 100 divided by GDP deflator. Okay. Answer there is option A, I suppose it is 2206.69 something. Okay, clear? Yeah, question. So we'll have for a 1920, that means 3200 into 100 divided by 145. Okay, a few more questions, 3 to 4 questions left. 27th, a direct question again. Which of the following is a famous book written by John Maynard Keynes? Okay, A, B, C, D. I hope you will understand that. I'm happy that you got the right answer. General theory of employment, interest and money, not investment and money. Employment, interest and money is the answer, right? Answer is C. General theory of employment, interest and money. Can somebody give me the year in which it was published? The year in which John Maynard Keynes published his famous book, General Theory. Right, sir, it is 1936. Okay, 1936. Fine. Next question. Which of the following condition is required condition for the operation of law of demand? Yeah, required condition, which is better known as ceteris paribus. What is ceteris paribus? Other things expected
remaining
to remain
constant.
the same. Yeah, ma'am. Other things remaining the same. You can apply the law of demand where demand and price is inversely related. So, what is a required condition? Other assumed constant values are price of other commodities remaining the same, income and taste and preferences of the consumer remaining the same, government regulation remaining the same. Then you have other factors like natural calamities or expectation about the prices, etc., all remaining the same. Only then we can say that the price and quantity demanded is negatively related. So answer is option B. Income and taste and preferences of the consumer is assumed to remain the same. All others, option A, C, and D, if they occur, this will cause to shifting of demand curve. Okay, if price of substitute good changes, demand curve will either shift to the right or left. Production does not have any influence here. Government policy changes. If government is introducing new taxes or they are tightening certain problems or certain policies, etc., this causes the demand curve to shift to the left. Okay. So correct answer for 28th question is option B. We assume that consumer's income, his taste and preferences all are remaining the same without any change. Penultimate question, supply remaining the same and change in demand. If demand increases, what effect can you see in equilibrium price? Yeah, correct answer. You are assuming supply to remain the same and bringing about changes in demand. My map has gone. Okay. Right. This is how we try to do the question. You have the situation given as this is demand curve. Supply does not change and it is assumed to remain the same. The initial level of the price, equilibrium price and quantity demanded and supplied is determined when demand is equating with that of supply. We assume supply to remain the same and any change in demand. Here the situation is given as increase in demand. This causes the price of the commodity to rise, okay, along with the quantity. Quantity also rises. But the question is determined in terms of or asked in terms of price alone. So option A is the answer where price is expected to rise. Okay. Last question of the day. Okay, answer is A, price rise. Last question. Cross demand is a change in quantity demanded of a given commodity in response to change in dash. Yeah, right. Cross elasticity means when price of related commodities change, what effect do you find in quantity demanded of your preferred commodity? So if I am purchasing tea, how my quantity purchased of tea will have its effect when price of coffee changes, right? Because tea and coffee are related commodity. They are substitute goods. Same way, if I'm purchasing bread, I'll be eager to know what is the price of jam because bread and jam are again related commodities. They are complementary goods. So demand for a commodity in terms of cross elasticity can be identified only when price of its related commodity, whether it be substitute good or complementary good, it does not matter. Price of the related commodity plays its own role. Fine. Okay, option answer is B. Okay. So these are the number of questions I had prepared. Was that useful for you in any manner? Can we do a numerical question on cross elasticity?
Hope all of you can wait for one question. Yeah.
Yeah, one question we'll do on cross elasticity. Then that concept would be clear. Okay, please wait. Just one question. Last question. Okay, I'll write the question here. The price of 1 kg of tea is rupees 30. At this price, 5 kg of tea is demanded. If the price of coffee rises from rupees 25 to rupees 35 per kg, the quantity demanded of tea rises from 5 kg to 8 kg. Calculate the cross elasticity. Okay, calculate the cross elasticity. Right. You can find out the cross elasticity using the equation. Elasticity is equal to change in quantity demanded of X commodity with respect to change in price of Y commodity. Okay, into initial price of Y commodity divided by initial quantity demanded of X. Okay, now here X is T. Quantity demanded of T is X. This is X. And price of coffee is Y. So change in quantity demanded, you have to consider the change also, okay, increment or decrement. So increase in demand from 5 kg to 8 kg means there is a positive movement of 3 kg. Fine. Then price has increased from 25 to 35 of coffee. That means there is a positive movement in price also. 10 rupee change in price also. Into initial price of coffee was just 25. Initial quantity demanded of tea was just 5. What is the answer? This is 5. This is 2. 3 by 2, which is equal to 1.5. So elasticity, cross elasticity is positive 1.5. Now, what positive denotes is X and Y are substitute goods. If you get cross elasticity as a positive value, then we can interpret that X and Y are substitute goods. If you get answer as a negative value, then you can interpret the nature of commodities as complementary commodities. Okay, these 2 points you can take down. If you are getting positive value while evaluating cross elasticity, then the commodities considered as substitute goods. Relationship between the commodities are substitute good. If your answer you are getting is a negative value, then the relationship or the 2 commodities under treatment is complementary commodity. Okay. Anything which I need to clarify?
If you want any clarification from Ms. Archana, just please ask her.
Ma'am,
Yeah.
yeah, now we saw a positive example. Can you just give any random example with negative?
Okay, ma'am. Just a second, okay. Another question, those who are interested, please wait for one more question of the same type. The price of 1 kg of sugar is rupees 50. Then you have at this price 10 kg is demanded. Then the price of tea. Since the names of the commodities are given here, you can easily find out whether complementary or substitute. Tea and sugar is complementary in nature, but instead of giving the name of the commodity, sometimes they will directly give you X or Y. Instead of giving the names of the commodity, they can substitute it with the X and Y or any alphabets. So at that time, it will be difficult for you to identify what relationship exists. Prices from 10 kg to 12 kg. Yeah, find out the cross elasticity and interpret the relationship. Find out the cross elasticity and interpret the relationship. Please work that question also.
Are you attempting? Anyone attempting?
Elasticity is equal to change in quantity is 30 to 25 means you will have a decline in 5. No, not 5, sorry. Just wait, okay? Change in quantity, right? So 10 kg to 12 kg, there is a positive movement, 2 kg increment. But here you can find out change in price as a decline. From 30 to 25, there is a decline of 5 rupee. So you write -5 into initial price is 30 and initial quantity is 10. Answer is -1.2. The initial statement that has been given is just for confusing you. It is of no importance or no need or no value for your question. These first two statement is nothing. Okay, so you'll get negative value. Negative value means goods that are under consideration is complementary in nature. They are complementary goods. 1.2 is a value, but is it negative or positive? Please share the question.
Archana, yeah, what you can do is that when you share the PPT to me, which I'll be sharing with them,
Okay,
you
sir.
add these 2 questions as next to slides and
Slides.
answers.
Okay, sir.
So that
I'll
will
do
be
that.
good. And if you can add on 1 or 2 any extra if you have, that we will share with them. Okay.
Okay, so I'll edit and give it to you, sir.
Yeah, give it to me. Then we'll share it with them. Then you will have 1 more hour. That basically will be a kind of, if that will be on the day that week when they have the exams. 11th is the exam and 6th we are you have 1 hour with us. Okay.
Okay.
At that time, if they have any specific questions, because they would have already studied and all, they can either ask the questions, and you can also put a few questions which you feel are very important, even if it is one word theory or anything. Yes? So that we can make them prepare totally, and they should score the full marks in economics. And whatever you have covered, there are sure questions going to come from this. Participants, don't hesitate to by heart the formula, whatever it is. Okay. And some thing I would like to share with you is that budget figures, latest highlights you should learn, and monetary policy figures also you should learn, and the important components like what repo rate, reverse repo, and what is the purpose of those instruments also you should learn. Questions will come on that, SLR, and what's the purpose of that, that also you should learn. Okay, these are, there will be questions from that definitely. And what I have to tell you is that you should take time at least to read the text, at least go through it at least once. Even if you don't by heart it, at least go through it once. And you should definitely, at the end of each chapter, whatever is given as check your progress, then terminologies and all, never miss that. Keywords and all that. There will be questions from that. Okay. So why reading the text is important is that don't try to collect too much of materials from the internet and all that. That is not, don't do that. And focus on what you have to do. And this type of questions what we have discussed are likely to come, and we will share you a couple of PPTs also, more PPTs also, which we have given to our regular class. And then go through the text. See, next 1 month remain committed. There's no excuse. Remain committed. Go through the text at least once. And as I told, you go through that keywords and these terminal questions and all at the end of each chapter. So definitely you are going to make, be sure that you are going to score the high in this exam. That should be your confidence. You should approach examination like that. Okay. And if you have any feedback on this session, or if you want any additional information, please let us know. Now it is open for you, otherwise we will close. Do someone want to talk about it? Anything?
Hi, Archana ma'am. This is Jayanti here.
Yes,
Ma'am, we have 2 types of that money value finding. No, one is at 1977 and another is 1998.
Yeah.
So depends upon the given value. If post office deposit added, we have to find that value from the first method, right?
77, yes, ma'am.
1977.
Yeah.
Otherwise, from the
Yes,
latest.
ma'am.
Right.
Yes, ma'am. But so far they have been asking only about 1977. Even though we
77.
have put
Okay.
into action 1998's value also, questions are still based upon 1977. So it is better that you focus more on that. But I have given you some additional values also, additional information regarding 1998, ma'am. So it is not that important. Please focus on the first one.
Okay.
Okay,
Thank
okay,
you.
do well. Sadish, Kamal Verma, Sanjay, anyone want to talk? Unni? Okay. Sadish, how are you now? Good.
Thank you, ma'am. Thank you, sir.
Okay, good.
Thank you, sir. Thank you.
Yeah.
So we'll wind up, sir, then.
Yeah. Sudhakar Babu, yeah, how was the class? Sudhakar Babu is there? Okay, good. Thank you, Archana, Kamath, for selecting those important likely numeric questions. Not only that, once they learn those questions, they get to know a lot of theory also.
Yes, sir.
So that's very important. Thank you
Yes,
very
sir.
much. Looking
Right,
forward
sir. Thank
for
you.
your next session.
Thank you.
Okay,
Thank you,
we'll be sharing the PPTs to you.
Right.
Thank you very much.
Thank you.
Thank you, sir.
Thank you, sir.